The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 27th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, well, let your fingers do the walking. You can always send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 24 points, 25,685 is the print. Pretty much flat, down not even 1%, not even 1/10%. S&P 500 down 0.3%, off 8 points. The NDX 100 off 0.5% or 33 points. Russell down 0.5%, that's 8 points. Semis are to the upside, up 0.5%. So basically, red across the board. Spot volatility index, interesting, something to think about. We don't know where it's going to close. If it closed right here, right now, with a one-day rate of change of 10.13%, above the 10% level, what would you be thinking today's shallow pullback is? That's right, another bottom. But it all depends upon where that spot volatility index closes. It's percentage, it's one-day rate of change. Gold. Now that's back 16 buckaroonies. That's trading down to 13.67. Silver's off 20 cents, trading at 16.41. Leading the charge here to the upside, you got Chipotle up 11 bucks. That's nearly 3%. Dillard's up $10. That's 14%. Douglas Dynamics up 6.60, 17%. Boeing up nearly 2% or 6 bucks. To the downside, it is AutoZone off 78 bucks. That's down nearly 11%. Google's off $15, a little over 1%. Acorn Inc. down $10 or 34%. That is a stinger. So what do we do first? Well, I say first we go to the first question that we have. This was sent in earlier by KS. We'll go by the initials here. And KS says, Steve-O. I say KS. Your calls on the general market have been great, although not so much on metals. With interest rates obviously rising and typically producing a stronger dollar, what's the technical reason for even considering the metals market? Now, I will take slight issue with KS on saying that my calls on metals are not so much. Now, that'd be a very short-term thinking conclusion, because you've heard the radio commercial. Last March 15th to be exact, 2016, folks at Timers Digest began tracking my calls. My calls, for which they track all of the newsletter writers around the world for the S&P 500, long-term and intermediate term, the Treasury bonds, and for gold. And for that period of time, from March 15th through, I don't know, the mid-January, I don't remember what the exact date was, in January, I was ranked as #1. So on a short-term basis, maybe, or the time period, KS, that you're looking at, okay. But you've got to say, and I'm not saying that just to toot my horn or, you know, to impress you, although it does impress me that I've been able to do that. And by the way, the first time that they can actually really publish my results would be their newsletter that would come out after March 15th, 2017. So guess what they did? They sent me an email late Friday and said, Steve-O, they didn't actually say Steve-O, but I'm using KS's language here, and I like Steve-O. They said, we would like to feature you in our April 2nd issue. So I must be doing okay. But let me answer your question out here. Because you're right. At this stage here, you've got the GDX and Nugget back $2 and 62 cents respectively. So they're pulling back. But your question was, what's the technical reason for even considering the metals market? Now, if I shared with you that my belief is that, pattern-wise, that gold is on its way up into the $2,000 level, would you be taking stabs at going long gold? Let me show you what I'm talking about. And I think I've shared this with folks before. But look, you've got to have a long-term horizon here. If you're going to judge me based upon what happens today and then what happens tomorrow, you know, as a short-term thing, then what I'm going to say just simply won't have any meaning. So I'm really speaking to everybody out there, and I will share with you and show you the patterns that suggest to me that gold has that opportunity to get well beyond its all-time highs out there. Now, it's one step at a time. And that first step is being able to take a look at a long-term chart and try to identify what patterns that are out there now that had previously been out there. You and I make a big deal, or at least I do, of the price oscillator. That's the very bottom panel of our screen. That's the difference between the 19 and the 39-day exponential moving average. Along with that, we need Stevie's red line. Now, the most bullish pattern that you can have is a rising price oscillator above zero. You don't want to step in front of that train, not unless you have the ability to call the top tick. Some people do out there. I'm not really about trying to call the top tick. It wears you out trying to do that. Instead, I just like to eat those big, juicy, prime rib steaks, cooked medium rare, if you know what I mean. Now, if we take a look at this price oscillator, back in 2003, this is the test that Stevie always likes out here. Back in 2003, and yes, rates were rising between 2002 and 2004 and 2006 at every single Fed meeting. We're not even close to that. So during that time period, we also saw gold moving up to its all-time highs at the present time. But back here, back in 2002, 2003, when that price oscillator got above zero, and when Stevie's red line was tested, it was off to the races. It was off to the races then. That's back in April 2003, during all types of rate increases that were going to continue to happen. We know that. There happened to also be, and I don't know if this is a coincidence, there also happened to be a repatriation. About a third, not even a third, maybe even 20% based on what it is that we have taking place now. Back here, Kevin, back here in December of this year, we had that exact same test that we had back in 2003. The patterns are eerily similar. And all gold's been doing is making higher lows. KS. Once gold breaks 1376, you won't be asking me where gold's going to. You'll know. Back to the highs. 0 to TFNN. Right there. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're taking a look at the story of gold. That's what we're spending our time on here this morning, or this afternoon, I should say. And so the pattern that was present back in 2002, in essence, took gold from $300 up into the $1,900 area. So it was a six-time move, a 600% move over that period of time. Long period of time, but I'm giving you the long-term horizon view. And at this stage of the game out here, we have the same pattern that is in place right now. I believe that over the longer haul that we're looking at, gold is going to go ahead and take out its all-time highs. Now remember, I said a 600% move, 6 times. Now, I want you to really open up both ears on this, and this will tell you why I keep taking stabs at the mining equities. We'll just take a look at the gold bugs index, because when we take a look at what it did from that same time period, this thing went from, in essence, $100 back in 2002 to $640. Okay, so a nice 600% move as well, right? However, the reality is, and what's taken place over time, this is really important to get out here. At least I believe that it's really important to get, is when gold really begins to move, the HUI over the recent years has been outperforming the percentage move in gold. It's been outperforming it. For example, during that time period back here in 2015, off the 2015 bottom, at this stage here, what we know is that was the bottom for years to come. At least that's what we believe, because we're just simply making higher lows out here. We've got this little consolidation sideways-ish type move, but back in 2015, during that first run-up, gold had a rate of change, because that's really what we were talking about, of 28%. Not too bad. However, the HUI's rate of change was 130% out there. If you take a look at another decent run, a run that we had from back here in July of 2017 up to a high in September, so a 2-month run, gold had a nice 11% move, but the HUI, the XAU, outstripped those returns 2-to-1. So where I believe it is, to the extent that you believe that gold is in the process of trying to make its next move. It hasn't confirmed anything just yet, other than on the longer term, where you really want to go ahead and focus is either in the general mining sector or start taking a look at the individual mining stocks and see which ones are performing the best out there. What is it that we need in order for gold to really move higher out there? We've got to see gold move higher, both priced in dollars and priced in euros. Something that's kind of hard to do, since the euro represents, what, 57.6% of the weighting inside there. Maybe it's not as hard as it seems. Well, look, what we need to do, if you take a look at this chart here, the top portion of the chart is gold priced in dollars. Bottom portion of the chart is gold priced in euros out there. You'll see these moves. What you see out here that you don't like to see take place are certainly divergences. And the reality is, the thing that has changed so much, maybe it hasn't really changed. It's just so prevalent and so easy for you and I to now access because of all the data we have, is that this really is a one world market. And you and I talked about it. When the euro is getting stronger and gold priced in euros is moving down and gold priced in dollars is moving up because the U.S. dollar index is getting weaker out there, don't think that that means that gold is off to the races, because you've got a counterpart sitting over in London saying, there's no way I'm buying gold priced in euros. I'm selling gold priced in euros. So if you're wondering who's the seller, who's the buyer, and what it is that we really need, we need to see both of these things move higher. And when we have divergences like the ones that are shown here, for whatever the reason, and it's a good reason, it's gold that's priced in euros. It is that divergence that is really narrating the story. Doesn't tell you when, but in this case here where we've seen higher lows form, this is back in the 2016 time. That's what, and we saw gold priced in dollars make a higher high. So there's your divergence. What happened? Gold goes ahead and moves back into the 2016 bottom that was out here. As gold was moving higher in dollars, it wasn't doing so between the time period of April 18th and June the 6th out here. When it comes to gold priced in euros, what do we see? We saw a pullback out there. This most recent time when gold was able to, in essence, get up to its highs from back in September 2017, when it was able to take out a swing point area from October 2013, when it was moving higher, we did not have that same pattern take place in gold and euros. So look, if you're looking for the sure thing out there and you don't want to take some stabs and occasionally get stopped out of a trade, then wait for gold to be priced in euros breaking out, as well as gold in dollars. But I can promise you one thing. If you do that, you're going to be buying in that mining sector at a higher price. So the answer to your technical question, why should you even consider it, is because of all of these things that have just been laid out for you. But you be the judge. All right, so now let's go take a look at these markets. Let's go try to figure out what's going on here after Powell has spoken, or maybe he's still speaking, I don't know. The Dow's moving lower. Does that mean that the top is in? Well, how do we answer that question? Oh, one last thing on gold, since it's kind of a segue into how do we answer that question. If we take a look at what gold is doing right now, and you're an aggressive trader, and you just heard Stevie's, stump speech out there, and you take a look at where price got down to today, the low of 13.1440, and you look at the TAS market profile on the daily basis. Here, let's just simply expand that screen. And you take a look at it, and you would say what? Gold held support of a bullish structure. And so for those of you that are aggressive trader, you're going to fire away right here, right now. Now, I haven't taken a look at short-term charts to figure out if there's a pattern there that ties out to this, and you probably want to do that. But here's what we know with regard to gold. It's still, even priced in dollars, has made a higher low today, because we're taking a look at this swing point back here from February the 8th. And that low on February 8th was 1309. So support has held, a bullish structure has held, and for those of you that would be looking to get in, that would be the signal right now. How do you know if you're wrong? If you're wrong, if you see it close below 13.50 out there, that's the key support level for gold as we speak right now. So that leads us into the segue of, well, what are the markets doing? Yesterday, we talked about the importance of the ES Mini, of the Dow Equity Futures contract, because those were the two that were running right up against resistance. Inside of the ES Mini, that price level was 27.7365 if you're looking on my screen. But what we want to be able to take a look at is the real price level. We'll just simply call it 27.73. Now, price is trading at 27.70 right now, so it's kind of teetering out here. If it closes back above 27.73, well, support will have been tested after it had been resistance. Yesterday's resistance, perhaps today's support. It is in the Dow Equity Futures contract. That number is 25,605. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we had a question if I would take a look at yen futures. That is for Ruby inside the Tiger's Den. And the question is, you're in this morning for a bottom, so you're looking for an upside target. Okay, so if you're in this morning for a bottom, then let's do this first. Let's take a look at the 30-minute chart. And if we take a look at the 30-minute chart, one of the patterns that you and I love to follow, because we know the tune of this market, it is in the key of G. And that means we look for that seventh wave move. That's letter G on my screen right now. And on a 30-minute time frame chart, so shorter term, kind of like when we said, hey, gold on the daily basis, it hit the bottom of a support level. It's TAS market profile, but we didn't know what was going on a short-term chart. Used to be we could just simply use yen futures as our gauge to make that determination because that correlation was like 100%. That correlation had gone away. I haven't checked it lately to see if it's come back, but with regard to taking a look at yen futures from its high to its low, it did get to that seventh wave move. It did that early this morning. I don't know what time you got in, but it made that move at 11, and at 11:30 is when you had that confirmation. Now, that's on a 30-minute chart, and the yen futures on a 30-minute basis have a lot of work to do in order to get to the bullish side, but they have given you a couple of bottoming signals out here. It gave you, right after that, it gave you a nice Tom to Mark setup 9 count out there, and we've seen some bullish candles. If we come over and take a look at the 30-minute time frame, I'm going to change it right now for you so that we are looking at apples and apples. Of course, in this case here, it's yen and yen. What you're going to see with regard to your daily upside target, I'm going to ask you to just stick with the 30-minute time frame. If you got in this morning for a bottom, the pattern that shows me the most of a bottoming tool and technique happens to be the 30-minute time frame. And what you're seeing right now is prices hit that first level of potential resistance, much like in the ES Mini that we're watching for out here, just a different time frame. And that happened to be the bottom of its box. The bottom of that profile out here is at 0.93295. We're trading just slightly above that. That's good. The structure of this box is equal. It's not bullish or bearish, meaning the center of the box is basically truly in the center at 0.934. That's your first next target today. I don't know what the length of your trade is at. And if price can, and that's the place where both buyers and sellers on this time frame are most comfortable. So could take a siesta should it get up to 0.9342. If it can move above that level, you're looking at 0.93551. To me, that would be your daily target to the upside today, using the 30-minute time frame out here. I wouldn't even go into a daily chart at this stage to try to figure things out. And if price gets above 0.93551, then hats off to you. This would suggest that it's headed higher out here. Because what you haven't seen for the last many hours, since 3 o'clock this morning, is price be able to close above the top of a 30-minute profile. So we're going to go with 0.93551. That is for Ruby inside of the Tiger's Den. And as long as we're there and we're saying, hey, well, geez, is there a correlation still going on between gold and the yen out there? I don't know. But if we were to take a look at other patterns that we like, such as the A to B equals CD pattern, that old lightning bolt pattern, and we looked at the 30-minute chart for gold here, we can see that what it created was a 1 to 2 A to B equals CD to the upside. And if you were a lucky owner of The Art of Timing the Trade, or Tom's original book out there, you'd know on one of those pages, I can't recall which one it is, that when you do a 1 to 2 A to B equals C, that means that your C to D leg is twice the size of the A to B. The market is going to do something else. So on a short term, take a look at a 30-minute chart here for gold, and you have that nice little bullish engulfing candle during the last half hour out here. That says gold's going to go ahead and at least bounce up to Stevie's red line, which is also very close to the top of its 30-minute top of its box, and that's in a 1321 area out there. So anticipate that gold's going to do that, and if gold gets above that, just like we took a look at the euro, well, then our hat's off to gold, and that it may have, in fact, been nothing more, KS, than a buying opportunity, whether it be gold or whether it be the miners out there. But again, those were the short-term charts. Now back to what's going on the daily basis, and I'll go ahead and take a look at emails during the next breakout here. 2773 is what we were talking about for the ES Mini. But if price closes below that, does that mean that that's it? Does it mean inside the ES Mini it was a counter-trend rally and look for price, make there's an A to B equals CD to the downside? Well, the way that I would answer that, the way that I would confirm that, I would need to see an actual bearish cross in the actual market breadth of the S&P 500. And what we received a couple of days ago, this is the daily chart that you and I are looking at, we received the bullish cross on February 23rd. So several days ago. Remember, on the weekly base, well, let's just check on the weekly. Let's make sure the weekly is still in bullish formation. It is. We received that crossover yesterday. So what this is communicating to you and I is that all that is going on is your garden variety retracement out there. Now, that doesn't mean that there's not some more pain to come. It just doesn't mean that. But what it does mean is, well, maybe it's nothing more than setting up the next buying opportunity. And so where would that be? And how would we know if it was just setting up the next buying opportunity? Well, we really couldn't look at the daily set of profiles out here for that answer. Instead, we'd have to go take a look at something on a shorter term basis. And on a shorter term basis, since we've been taking a look at 30-minute time frame charts, well, let's go take a look at those for the ES Mini. Let's get rid of those current wave counts that are in there because we don't really need those. What you and I know, just like Dave Mason, we know that as price was moving higher, doing this earlier this morning, this was at the 10:30 time frame, while Mr. Powell was on the air. Price was moving higher on this time frame, doing it. Well, that's relative energy. That's that black line that automatically gets drawn on Stevie's chart out there. And then the sellers rushed in. They rushed in. They created that bearish engulfing candle. Price got down below Stevie's red line, made a low. And what we've seen here is that price oscillator get down to zero. And in essence, price bounced up to that level as I was coming on the air, actually between 1 and 1:30. So the last 7 minutes didn't totally get up to that red line, but close enough to be a rejection. And what this might be saying to you and I is that we've got a short-term A to B equals CD to the downside forming inside the ES. And if that 27.56.75 level fails, then what you're looking at is a pullback to the 27.40, 27.31 level. It has to break that swing point. Probably should break it with conviction. We don't know if it will or if it won't out here. But what we do know is the setup right now is in place for that, in fact, to unfold. And that would then be very likely, as we pull this chart back, one of those price levels, it'd have to be paying attention and looking for that Gartley buy. That would be your next entry into a long position inside of the S&P 500. But while that's going on, you want to make sure that there's no nervous breakdowns going on inside of the other equity futures contract. That means you need to see the NQ stay on that wall, above that wall, which is 68.23. Now, as we speak right now, you've got an orange-colored candle. That doesn't mean it's Halloween. That doesn't mean we eat candy corn. It means we might have a new profile forming come tomorrow morning. Steve Rhodes, what is candy corn anyway? It's neither candy nor corn. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Tim writes in and says, Steve, I've got a small position at about this price. We're trading around 89.84 in ticker symbol MSM. MSM is actually says MSM, MSC, Industrial Direct Inc. looks like the name of the company out here. Is this a good place to add to MSM? Have the best of days. Well, thank you, Tim, and the same to you. So this one is, let's take a look at what we know at this stage here. What we know, and just take a look at our 3 time frame charts for MSM, daily, weekly, and the monthly. It's the daily and the weekly that are speaking to you as we speak right now. In the case of the weekly, you can see the price this week, last week, the week before, the week before. So for the last 4 weeks, the last month, worth of weekly signals out here. The bottom of its bullish structured box, bullish structured because the center is closer to the bottom being 88.34, continues to be tested, continues to hold the support. So you know you're up against good support. If I were to have looked at this chart without those profiles, I would not have been able to have made that conclusion. I would have seen this wide-ranging bar for this equity for the week of November 27th, with 3 million shares. That was the week that began November 27th, so we know it was right after Thanksgiving, I believe. I, of course, can't remember the exact date of Thanksgiving. I wish I could, just off the top of my head, but certainly right around there. But that volume was 3.3 million shares, and you pulled back 4 weeks ago with 4.5 million shares. So it's kind of pulling back into a level of support, you know, with volume. There's this big downdraft area out here, so big group of shareholders during the week of July of 2017, 13 million shares. Maybe that, in essence, is the group that's helping to hold it up. I don't know. We don't need to know. We just simply know where the profile level's at. And this would mean, okay, I could say, yeah, sure, you could go ahead and add here. Don't let this close below 88.34, because if it did, price would head to 84.26. If that's the type of heat that you could take, then you stay right there. Now, on the daily box, and this is where this probably says, you know what, Tim, don't add here. Not right now. Because what price has done today is tested the top of its box. Now, this box is pretty equal in nature. Center is pretty much in the center. Bottom's 87.21. Top's 90.36. Center's 88.79. The high's been hit, or the top has been hit. It has held as resistance. That's the 90.36. You're trading at 89.93 right now. If price were to close over that, well, then I'd say then support's going ahead and adding to the position. But if you can't bust them to the upside, well, maybe this will try again and pull back. So since you're looking to add and you're already in and you haven't busted out to the upside, today's volume, this does not trade a lot. So that's another kind of an issue that Stevie has with this. You've done 204,000 shares today. You're going against 384,000 shares. It's not the most liquid of instruments that is out here. But nonetheless, whether it's the most or is the least liquid, we can still use this data. We can still use these numbers. So I'd say no. If you close above 90.36, then okay, go ahead and do it. If you don't close above 90.36 and you want to add, I'd say 88.34, 88.79, maybe even at 87.21, although I don't think it'll get down there. Could, but hasn't yet. So 88.79 to 88.34 would be my answer, but I don't want to squabble over a few pennies or a couple of dollars because I don't know what your long-term horizon is on this equity and the reason why it is you're looking at ticker symbol MSM. That is my thoughts and take a look at the charts as we speak right now at 1:46 in the afternoon. Let's see if we have any other requests out there. It doesn't look like we do. I don't believe there's anything else inside of the Tiger's Den. So what do we go take a look at? Let's go take a look and see what the advanced decline oscillator readings are doing here. And for the New York Stock Exchange, they're fine, still in bullish condition, still above zero. Print is 65 and change out here. Inside the Dow, still above zero, printing out at 1.28 as we speak right now. Above zero is bullish with regard to its advanced decline oscillator, meaning it's market breadth out there. And it's the NASDAQ composite. You and I looked at that yesterday. That was like, this is the one that's the little booger. It's the fly in the financial ointment, so to speak, out here. And it is the NASDAQ, in essence, that led us up, more the NDX 100 than necessarily the entire composite. Although the entire composite did just fine, but never got that market breadth that it needed to be able to sustain that move higher. And it does mean that things are a bit questionable. The other real big problem out there that the market needs to resolve in order for the NASDAQ and everything else to go on the higher highs out here is one pattern, one ping Vasily. And that pattern is this. You and I love to take a look at the equal-weighted version of the NASDAQ 100, the QQQ series ETF. That's called QQEW, standing for equal weight. The First Trust NASDAQ 100 equal weight. It's not really 100 issues in there, but it's like 106, 7, 8, whatever it might be. But the point that is most important, and the Qs have not done it just yet. Very close yesterday. Very close. So when I say we have a divergence, it's very tiny because the Qs have not taken out their highs. But if they do, and this is on a closing basis, we're looking at a line chart out here. That's 170.93. Yesterday, what you got up to and you closed at was 170.40. So just slightly below. Hasn't taken out. But we can see that the strength inside the Qs is not the same strength inside the equal-weighted ETF. The reason we want to pay attention to this is because it is just like when we look at the euro, gold price in euros versus gold price in dollars, we just simply transfer that over to just simply what's the equal-weighted ETF doing for the Qs, because it's the one that really needs to confirm the moves lower or confirms higher. For example, back here in September 2017, September 25th, we actually saw the QQQ series ETF break below a prior swing point on a closing basis. That was September the 8th. But when we looked at the equal-weighted version, not so fast. Didn't even get down to that swing point. What did the market do from that point forward? The market went higher through when? Went higher up into the January 26th timeframe on a closing basis out there. The divergences work both at the bottom and work at the top. So the thing, yes, we got up to where I believe the technology sector, the XLK, was going to get to. Did it yesterday with volume, where the NASDAQ was going to get to. But now, in order for the markets to really be able to scream higher, take out their highs, get that NDX 100 up to the 8,800 level, where it is headed to over time, we need to see both of these take out their previous highs. And it's the equal weighted that has some work to do. So it is really no surprise to you or I that when we switch over to take a look at who is not performing well right now, well, it's the NDX 100. It's back 0.7% as we speak versus 0.5%. There is 0.6%. in the S&P, 0.4% in the Dow out there. So that's why it's a little bit weaker. But remember, well, we didn't even look at it. You had that nice market red daily crossover. Whoa, we've got to reset this thing. You had that take place. This is bullish. This is all 100 issues. This is also equally weighted. And you had a nice bullish cross on February 23rd for the NDX 100. It's not so bad.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Bill writes in, says, Steve, I trade the ESPN on the short term. Could you spend the last segment there providing me with more information on the ES, what I should be looking for? So earlier we talked about the possibility of an A to B equals CD to downside. I want to make sure that you are aware of that. And if price gets below 27.56, you're looking at 27.40, 27.31, 27.19 as your A to B equals CD price targets out there. As long as price stays, this 30-minute chart, stays below 27.72, Stevie's red line out there, that is a real possibility. Now, the other things that we need to take a look at are the profiles. And interestingly enough, here, if we take a look at the 120-minute, you're looking at 3120, 240 daily and weekly on my screen out here. If you look at the 120-minute chart, you'll see that that is a bullish structured profile. 27.56 was the bottom or support. Price got down to 27.56. The center of the box, 27.63. You'll see that this is a bullish structured box out here. So it should be up against good support. That says that if, in fact, 27.56 holds, There's no reason that the ES Mini cannot bounce to 2783. That's one level. I've got the 30-minute time frame as well. And during the show out here, if I turn price off, this has a fairly wide box out here. And so to assist you with those numbers as I turn price off right now, you will see that this too is a bullish structure. What your email didn't say was whether you were on the short side or the long side of the trade. If you're on the short side of the trade, you want to see it close below this 2760 level. Bullish structured box out here. But a move down there that gets tested and holds, and this is a wide box, pretty wide box, right? Because you're looking at 26 points out here for the ES Mini. So that's, on one contract, that's $1,300 out there. So 2760, if that holds as support, and you see price get over 2766, 2786 is in the cards. Folks, stay tuned. It's Terrific Tuesday. You know your favorite polar bear, mine, David White. He's up next. I'll cover for Tom from 3 to 4. I'm not sure who's covering from 4 to 5, but Andy Heck, he'll take it on home from 5 to 6. Take care. Have a great day. I'll see you tomorrow or in an hour.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.